Beauregard. I currently work with Bloq, BLOQ, not to be confused with Bloq One, but Bloq is an enterprise solution provider. We provide a platform of blockchain systems similar to what you would get with IBM's Hyperledger. We're putting it into large financial institutions. Prior to that, I ran a company called CodeCoin, which you may have heard of, one of the big payment processors in the space. Launched that company back in 2013, and at the time we really felt like we were way too late to the market, and BitPay and Coinbase had already done it. So we thought we would have a hard time gaining traction. Thankfully, we took a different approach, and we decided we would make it a multi-token platform. So rather than just take Bitcoin, which was sort of the way to do it today, we recognized early on that it was going to be a sort of multi-token world, and set it up to take multiple different cryptocurrencies. So anyway, that's sort of my background in crypto. Prior to that, I spent a lot of years building enterprise applications for big companies in the area, mostly around LA. And we got a really interesting panel here, very diverse. I've known a couple of these guys for quite some time. I'll let them both go and give their own introductions of what they're up to in the space. And then we'll do a little bit of table setting in terms of setting up for blockchain and the discussion of the evolution.
Hi there, my name is Odynn. I'm based out of Toronto, Canada. I run a think tank for financial technology and artificial intelligence called the Digital Finance Institute. We've been around for about 4 years now. We have offices in both Vancouver and Toronto. I'm also the head of the financial intelligence unit for Einstein Exchange, which is currently Canada's largest and fastest growing digital currency exchange, also based out of Vancouver. So I'm speaking on behalf of both organizations with you today. So that's a little bit about me.
Good morning. My name is Pavel Kravchenko. I'm from Ukraine, so I came long distance, not just to this conference, but I'm a photographer, so that's my background. I've been working as a developer, as a security engineer, as a project manager, and in 2015 I went to Silicon Valley for some time. That's where I met actually with Steve. And I joined StillMark as a photographer. That was April 2015. And then that's how my career started. So now I have a company which is called Lab, and we are focused on tokenization of real assets. So we build basically enterprise software for one use case. It's quite narrow, the market is still not very small, but we believe it to be much bigger.
Hi, good morning. My name is Alyse. I'm a venture capitalist by trade and by training, and started in about 2011, 2012 investing in enterprise and infrastructure technology. And from there, in about end of 2012 and beginning of 2013, I came across blockchain and began to dig into blockchain as an infrastructure and something that could perhaps introduce disruption, change, and opportunity across fields. That's just around the time that I had the good fortune of meeting Steve, so I'm one of the folks that has known him for quite a while. Now, in 2016, I launched my own practice after working at two of LA's larger groups, and that practice is now called StillMark. And StillMark operates as a generalist fund, so it doesn't just invest in blockchain or cryptocurrency-focused technologies, although the majority of our attention, time, and dollars are there.
Yeah, like I said, we're really lucky to have this panel. They're very diverse and also super, super experienced. So that's great to work with these. So just for some general table setting about blockchain in general, and the analogy I like to give is think of the blockchain like the wheel. That's the invention that sits below, and now you can have all sorts of different vehicles, everything from SUVs to race cars to 18-wheeler trucks. So I do believe that we're going to have many, many applications. I mean, some of the early ones, obviously, payments was one of the use cases that's built on top of the blockchain. Bitcoin, unfortunately, has pretty much failed as a payment mechanism, but that's the way it is. So let me just sort of go down and talk about some of the other use cases, such as fundraising. You have use cases such as supply chain management, where you can use blockchain. And so I'll start with you, Alyse. So what do you see right now today? Using it as investment fundraising mechanism seems to be one of the bigger use cases on blockchain. What trends do you see emerging?
Yes. So I'm really excited about opportunities for innovation around how people fundraise. But first, I want to respond to what Steve said about Bitcoin failing as a payment processor, just to say that this is a place where we take a different view. So something that we know was written about and discussed with the early cypherpunk group near to when the Bitcoin white paper was released in 2009 was that consumer scale or ability to use Bitcoin blockchain for mass audiences would happen at second layer infrastructure. And that made sense. That made sense for me as someone that had done infrastructure investing in the past in things like data science innovations, data center structures, and cloud networking. Kind of the boring stuff, that's what I had done. And so in seeing blockchain be introduced through Bitcoin and the Satoshi white paper, it made sense that there would be multiple layers to the infrastructure and that layers would be used differently for different needs, different security profiles, and different levels of scale. And I think we'll talk about that probably later in the panel about what second layer does for scale. On fundraising and ability for companies to finance their growth through different mechanisms rather than VC financing, I've been really excited to see that cryptocurrency can possibly open a door for a new type of founder. So traditionally, when companies need to raise capital, folks like myself or folks on Sand Hill Road can kind of gate access to who has resources to build a company. But through token participation events or cryptocurrency like securities, we can see folks go to market with an idea to an audience that might better get it, frankly, than the folks on Sand Hill Road. And so I've been excited to see those changes.
Excellent. So since Pavel's choking at the moment, we'll
I think one of the things about Bitcoin sort of failing as a payment processor is that it's slower, right, than any other form of payment processing. If you go through like a credit card company or your bank, they can process something like 20,000 transactions per second. Bitcoin can process about 7 per transaction. So, I mean, the scalability there.
But that's on, and so just so we're clear with the audience, that's on the first layer. So we should separate it on the top.
Yeah. So it is different than like Ethereum or any of the blockchain 2.0 things we have going on now. And obviously it'll be different in the future when 3.0 comes out and we're able to sort of do interactions between things and companies and people and everything all together. But I think that's sort of where it started off is it was slower to begin with and we're moving out of that phase now and there's definitely, as new technology emerges and there's new innovation in the blockchain space, that was one of the holdbacks initially is that like, you know, it is slower, you can process less things, which means you're waiting. So if you want to make a small purchase, like, you know, buy your morning coffee or something with Bitcoin, it doesn't make sense to do that, and it gets really, really expensive when you're processing lots of smaller payments. So I think that's just one of the holdbacks that we're seeing in this space.
Yeah, and I would agree. But there's cases like at GoCoin where we would have a lot of transactions around $20 or so. It's far more efficient to use a credit card at that, and even cheaper to use a credit card at this point because the mining fees have gotten so large. And in that situation, we're dealing with unique buyers. So something like the Lightning Network doesn't quite work for us because we don't know necessarily where the money, you know, who is actually sending it in because it's a customer of the merchant. So that's sort of a unique use case. And when I say it's failed as a payment mechanism, I just mean sort of, you're right, the lower dollar value transactions. It's still, you know, by and far away, you know, the best thing for international cross-border payments and other places like that. But Pavel, let's get into some of the, you know, your thoughts here on payments, and we can move on to some of the other use cases around blockchain.
Yeah, it seems that Bitcoin wasn't designed really for payments because obviously if you have a decentralized network and you have to distribute all the information between all participants, it would be much slower than traditional systems. And Bitcoin just showed the way that you can build payment systems using cryptography, and it's secure. And it's even the fact that the whole database of transactions and accounts is online, but sitting there, nobody's protecting them, no firewalls, no guards, Bloq was designed for a fully anonymous, decentralized, censorship-resistant environment. And it makes sense to use it there if you want to escape these restrictions. But if you're a regular merchant, if you operate within some compliance, then you don't have to use all these features. Right? So obviously, other systems like central bank currencies will be built, and it's the same idea. And they will be much cheaper than Visa, much cheaper than any other methods, just because they use modern techniques like cryptography to protect accounts. And again, you don't need to spend that much money on security because Bitcoin showed the way how it works.
And I think there's sort of there's a couple of different ways that people have approached the blockchain. Like as you look at the evolution, one is that you have layer one, which is your a Bitcoin or something, and you build a layer two, like a Lightning network on top of that. Ethereum has had their evolution, and then there's others that have just taken a completely fresh look at it, and they're just going to design a brand new blockchain based on sort of fresh code and so forth. Do you think that possibly we'll see better scaling solutions with somebody who's just coming out with fresh code, similar like what Brian Singer's doing at Chia, or like Nexus Earth is another company that's taken the fresh approach of just, okay, we take the invention and now we're just going to write an entirely new code base and make it scalable from the ground up. So what are your thoughts there?
I think we have to separate use cases. So again, anonymous censorship resistant in one thing, because they have to protect from different attacks. It's like this building probably built, it's in a seismic zone, right? So it has to sustain 9 on a scale of Richter. And buildings like in Ukraine, they don't have to, so they're much cheaper, much simpler. And the same here, so there will be innovation in both areas. In regulated payments, so it's just about managing identities and making the whole system secure. And in fully censorship resistant area, when you actually, I wouldn't say you should not even use proof of stake because it's already not, it breaks anonymity to some extent, anonymity of miners. So there were 2 areas, and they were both developed for different people, different use cases, and it's probably not right to compare. It's probably you've heard that people say, "Oh, our coin is much faster than Bitcoin." Yeah, sure, but it's not operating under the same security assumptions, right? It could be much faster. You can use BFT, and it's not a cryptocurrency anymore.
Yeah, so, sorry to interrupt. So I'm interrupting to say I think that's exactly right. I think that there'll be different, one of my hypotheses, or the hypotheses that we operate under in investing, is that we expect that there'll be multiple protocols and multiple blockchains that have different feature sets and different use cases. And so some will be built for security and decentralization, and those things are related, right? So only if a blockchain, if a protocol and a network is distributed, only then really can it issue you hard promises to say things like, we will have a 21 million cap. You can say that if you have different and contentious stakeholder groups and distributed players. You can't say that if you have, an HQ that kind of is running decisioning and issuing marketing dollars, right? And so there's certain reasons to use a protocol like that, and then there's other reasons to use a protocol that may have, quick, different feature set in terms of the quickness of block processing or the amount of data that can be propagated through one block in the network at any one time, and it's always a trade-off. And so I think what's important what I hope audiences or folks involved in discussions are thinking when they're listening to speakers is to recognize where people's motivations or incentives might lie, and to expect people to be speaking their book a bit. But I hope that, so I always try not to do that, because I think just understanding the basic fundamentals is really critical, and the more that we as a community understand basic fundamentals, the better for the overall function of the ecosystem. So the reason why I've been pointing out that payment isn't failed on any particular network, so I don't think it's not failed on any network, not just Bitcoin, is because on some of these networks that are optimizing for security and decentralization, they'll need other levels of infrastructure in order for applications at consumer scale to be achievable.
That's a good point. So, Ellis, you think about your business? I mean, you guys are basically looking for nefarious actors doing bad things on blockchains. Are you primarily Bitcoin based, or how are you handling the sort of onslaught of all of these new blockchains?
Yeah, so sort of part of my role as the financial intelligence unit is we monitor and record everyone on our platform who uses and transacts with us. So we're able to see who they interact with and what funds they send to who, from who. And so part of what we do is we do monitor criminals or people we suspect as being criminals. Or, you know, if we find that someone has sent money or received money from a wallet that we have flagged from elsewhere as being suspicious, we'll then monitor them. So yeah, I guess when we're monitoring these criminals, we do come across a lot of things, and primarily it's not always Bitcoin. They do use other networks, other digital currencies. I mean, we're seeing a lot of Dashcoin, right, because it's tumbled. So a lot of times people are using that if they're trying to conduct some sort of criminal activity or purchase something that they want to keep under the radar. However, as an exchange, we're very transparent in terms of who our customers are. We obviously know who they are. We're going to onboard them properly, and if we don't get the right documents, we don't know who they are, we won't onboard them, and they can't use our services, which makes it hard for them to actually use Bitcoin and digital currencies to exchange goods.
Yeah, one of the other use cases that seems to be emerging a little bit is the digital collectibles, and it's for gaming. There's companies like Wax that are using it to sell op skins, and that's like the sword. If you want to put like a cool sword, and you have that. There's a lot of trading going on. What are your thoughts? I know you've looked at a good bit at this market, Alyse. What are your thoughts about like digital collectibles? Do you think that that's a use case that will continue to grow? Do you think there's a future in that as well?
Yeah, so we haven't invested in the space yet, but I think non-fungible digital assets are also really interesting, and we're aiming to learn more about that.
It's here. I was listening there.
Ladies and gentlemen, Gideon.
And I also think there's an opportunity for LA here. So some of the most interesting innovation that we've seen in non-fungible digital assets has happened out of LA. So Opskins and Wax Token is based in LA, and there have been other digital asset or tradable card-based innovation happening here. And in fact, some of the technologists that have introduced the most progressive innovation in the space are also based here. So we're looking at it because it's of interest, but also because I'm based in Los Angeles and I appreciate that the local talent has taken a lead here.
So you can also use this kind of trading. I mean, I'm wondering if this is something you guys are starting to track too. Like you're tracking blockchain activity in there, but now you have sort of these collectibles and things that do store value, and they can be transferred among people. Is that something that you're watching as well?
It is something we're watching. It's not a priority at the moment. We have other things that we have prioritized above watching who's trading collectibles. But down the line, I think it would be really cool to start monitoring that a little bit more closely, see who's into it, what types of things that they're actually interested in and engaging with.
Great. So Gideon, we'll give you a chance here to introduce yourself. Go and rewind a little bit.
The other panel was so interesting, I didn't realize I had to speak here. I represent a company called BitMint. We digitize commodities and fiat currencies. We have contracts in several countries where we digitize their fiat currency. Like in China, digitize the yuan. So we don't compete, it's not speculative. We simply
Just talk to the mic, so he's recording over there, so you can pick it up. Just talking to it, it should be fine, right? Just talking.
Okay, now you can hear me. So it's not speculative, but it's digital. So all the good things of easy storage, making your phone your bank, cross-country transfer, reliability, security, all these good things are there. Only you take off the speculative nature and you allow yourself to be legacy friendly. We are built in such a way that you can start from where you are now, the previous to digital money, and to go into full digital money with all the advantages that Bitcoin provides. Basically, our idea is to that we define the simplest mathematical way to transfer money into bits such that the sequence of bits will represent value and identity. That's what's missing from normal digital money. 90% of the money today is all digital. Only 10% are coins and bills. But though all this money is a number, it's a number in a computer address. What we are saying is that you will have those bits that have an identity, like a serial number on the dollar. This fact is the foundation of the revolution. Because money that has identity, you can tether. I can send you this money and say this money is just good to buy food. You cannot go to the casino, play the casino. I can direct what you do with the money, and I can tie it to a smart contract and every logical condition. The old concept of traveler checks. Remember traveler checks that are tied to your name? We do it electronically. So you can carry all your wealth in your phone. If you have $1 million on your phone, you lose your phone, no problem. You call BitMint, we download the bits to your new phone. So you didn't lose anything. So that's basically where we are coming from. And also, another distinction is, we believe that the technology needs to be worked on, not just the use cases. I bring to our company the perspective of time. Some 25 years ago, I was head of the Department of Artificial Intelligence in a large company in the DC area. And we just got lots of money to develop all these use cases, what artificial intelligence will do. What we didn't realize, we had a good idea of AI, but we didn't have yet the technology. So it didn't pan out only 30 years later. I was involved in the old Reagan Star War. The Professor Teller said, hey, we will just stop the Soviets. Technology was not there, but it was there 30 years later. The same thing here. The technology, before the use case, has to be worked on. We heard in the talk before, Jesse said, I know that there is a lot of math, I don't understand it, but it's there. Most of the people who talk about crypto don't realize that the math under which is not very solid. In fact, we have no proof that it works. Only that nobody published a way to crack it. Somebody cracked it and didn't publish, we don't know. And quantum computers will just throw it into a shambles. And most of the people who talk about this are lawyers or people who don't really understand the math. So we believe the technology has to be worked on.
I agree. I think we all
One
agree.
more thing I will add, there is another technology that is the basis of making it robust, and that's the technology of using generous amount of randomness. Not fake randomness, algorithmic randomness, but quantum mechanical randomness. That's the summary of it.
So I'm gonna go back to the man on the panel who knows the math and understands the math, the cryptographer, Pavel. So why don't you tell us a little bit about the path that your company's taking and with respect to the evolution of the blockchain, and I think you're more enterprise focused, correct?
Yeah, when we started 4 years ago, we just took any random word just to be known in this space. Then we started to focus on financial applications specifically, and we formed our mission, which is to build financial internet, like a situation when all accounting systems can freely talk to each other, like regular internet. And it has to be built on open source and license-free software. It's the foundation. And tokenization, as we work on it now, we see it as a very simple thing, very simple. We just digitize ledgers. It doesn't really matter which ledgers. The simple assets are those that are fungible, divisible, and make sense to transfer. So like money or stocks or loyalty, they're all examples of real estate of these things. So we just digitize ledgers, and it means that we build software, and we already built a framework called Toolkit that allows you to launch your own ecosystem, which consists of your private blockchain, digital And then every system that's installed in that way has the same API, so it can be accessed by similar tools.
Okay, interesting. So Alyse, as you look at the enterprise applications, have you seen any that you seem to be bubbling to the top that you consistently see?
Yeah, so maybe not on, so yes, on the enterprise side and on something that looks more like consumer tech. One opportunity that I've seen that appeals through the use of cryptocurrency and blockchain technology to enhance this proposition is the convergence of mesh networking or device-to-device connectivity, where you can kind of almost create like a telecom network in areas where it might not have it or where bandwidth just permits good connectivity. And seeing that be matched up with cryptocurrency. And because you can easily break down units of contribution via time or amount of data contributed or connectivity, it's something that can be matched against a token, as the last speaker referenced. And so I had looked at mesh networks also in 2013, separate from cryptocurrency, in a company called Odynn, where we invested, and saw that you can get a mesh network going in instances of acute stress or event. So where we would see something like Odynn used is where there was a battle between government, non-domestic government, and a population that was, asking for freedom or asking for free communication, and people would use that mesh network application in order to communicate then. But then, even as it was running in the background, after this acute event had happened, and they again had access to internet and World Wide Web connectivity in addition to the mesh was only incrementally adding to their experience to make the connection like slightly better versus being the sole connection. People stopped recognizing the value of the application. But what cryptocurrency has the ability to do is start to recognize the way the mesh was contributing, even incrementally, such that it kind of almost gamifies the experience. So people start to realize both what they're paying into something like a mesh network, where there's a network effect, and what they're taking back. And so these are the types of applications that are most exciting, where you can kind of start to allow people to understand the community they're in and how resources are shared by representing them through a token, and how a technology can become more valuable because it's using blockchain and tokens.
Yeah, interestingly, you're stepping into the area of censorship, and we're being censored and having governments taking control over what you can and can't do. And I think that's a really interesting conversation when it comes to blockchain too, because you're seeing these distributed apps that are starting to come. And so another use case would be uncensored distributed applications. And so I'm going to direct this one to you, Ellis. I mean, what are your thoughts around these distributed apps as they start to gain traction?
I think it's really cool, and actually I wanted to sort of ask Gideon a quick little question right here. You mentioned something I thought was really cool, where you can sort of designate coins to be for a certain purpose, like you mentioned one for food. And then while we're on the topic of censorship in the government, how could you sort of merge something like what you were talking about with like food stamps, for example, have that on someone's phone, you can pay for your groceries with your phone as a food stamp, but it's a digital currency or something like that. And then we can start to implement that on like an everyday basis for real humans, and blockchain and interacting with digital currency stops being this concept that so many people don't know about it. It's something they're actually very familiar with.
Of making money not this fungible entity, which is the cause for all the abuse and the fraud that happens. Because once I give you money and you agree with the money to buy provisions for me, I have no control what you do with the money. You can spend it all in a casino and then come up with a story to me. And that's why we have to have accountants and lawyers to track you. Everybody takes a bite. And this can be prevented if you don't give them fungible money that they can abuse, but you give money that can only be used for the purpose that it was designed. So you can, what I propose to them, take the BitMint money or any other digital money and send it to the cell phones of the people that live in those poor countries. They all have cell phones. $10 a month starts the economy there with microcredit. It's fantastic. And the money is never in bulk, so nobody can abuse it. So the number of applications of just the idea, it doesn't have to be BitMint, but money that has say, this dollar goes to this purpose and not to other, this is so powerful. I wrote a book called Tethered Money. You can download it on your phone, on your way home. It describes all the things that you can do. I talked with AIG, with the chief technology officer. They said, we paid for all those people that lost their home in the storm, and they guarantee that they use the money to fix their home. In reality, of the average payoff is like 50,000, they use 10,000 to barely fix the home, and then they buy a Mercedes with the rest of the money. Which is not good for us, because the next little storm destroys the house. If we could give them tethered money.
But that's called freedom, right? Yeah. So I see, so I'm a little concerned, because I saw people in the audience like really nodding along with that, and I want to say this. I think that, so if any of us have dollar bills in our wallet right now, I presume that we don't want to be able to use them, at 7-Eleven, but not at, like Safeway or something, right? You don't want to have your dollar bills. I feel like we all should. So one of the reasons why I got into the space, and I know Steve, for instance, got into the space early, was because it allows a greater financial sovereignty and an ability for us to be able to interact with each other and with vendors without having a third party say, yes, you can. So without asking Bank of America for permission, or Chase, or, and frankly, some of these banks have already failed us, right? But even setting that aside, I think that it's a bit paternalistic to assume that we should be told how we can spend our money, and even to go through the old system, which is going through third parties. So when you're using your credit card, there's things that all of us in this room can't buy now, because the other person on the end of the transaction, even sometimes just by geography, is deemed to be too high risk. So if I want to purchase something from a vendor, from say a fashion vendor or a purse that's coming from Eastern Africa, I have to ask my bank for permission to do that, and my bank will assess if the risk is too high for me. But what Bitcoin does, if it remains to be decentralized and fungible, fungibility is a really critical concept here. What that allows is for me to decide for myself who I transact with.
Yeah, and I totally agree.
But the answer is very simple. Money that I earn, if I do something for you and I earn $1,000, you don't tether it to anything. I do whatever I want, casino, whatever. But if I give you money because I want you to study, or I want you to have food, or I want you to do a research on something, I don't want you to abuse the money. Unearned money should be tethered. Earned money, not.
No, I totally agree. I agree with both of you. And I think in the use case where somebody is giving money away and you want to make sure it's not diverted into the wrong places, or people going to buy lottery tickets when they should be feeding themselves, yeah, we can protect against that. But I agree. I'm in the space because I believe in financial freedom. And I see a world in the future where I'll have a token for all sorts of different purposes. And, I'd like to see a wallet where I could, let's say I want to ride my Uber, but I don't have an Uber coin, but I have Bitcoin. I should have a wallet that says, flip this Bitcoin into Uber coin and pay for my ride. But what really is evolving here is these communities and ecosystems around aligned incentives. And I think that that's what we start to get with the distributed apps. And anyway, I think
also for freedom, what digital money allows you to do is pay as you go, rather than subscription. Today, lots of things that you want to join, or you have to have subscription. You want to read the Wall Street Journal? Subscribe.
Yeah, that's
I cannot pay $1 to read this article, and that digital money will allow.
Yeah, and that's one of the problems with payments is, traditionally they pulled money from our accounts with credit cards, and now it's a push mechanism. And so there's not many great solutions in crypto for how you do recurring payments. But there are some places where it is nice to have that. Just say I subscribe to this and I just get it, and I don't have to think about it. So let's sort of go down, and we're starting. How are we doing on time? Who's in charge here? I know it says that we should have another 7 minutes, but I know we started a little bit late.
And I really started late.
You started very late, but you made up for it.
We just wait until somebody comes and says, "Oh, it's my penalty."
Right. So I think at this point, let's just sort of open it up to the to questions and see if anybody in the audience has. So fire away.
I'll say a question about this blockchain. You guys know EOS. What do we think?
EOS?
Yeah. Crypto blockchain.
Yeah. What do we think of EOS? EOS compared to other blockchains? I'll start down with Alyse and let you tackle it.
I was waiting for Steve to answer. Honestly, I don't know much about
Okay,
this.
I know a little bit about it. I think that it's a very interesting question. So for those of you that don't know, EOS did probably one of the largest and most successful ICOs, if you will, if that's the right term. They launched on the Ethereum blockchain as a ERC20 token, and they raised some absurd amount, like $1.5 billion or something like that. They ran their sale for over a year, and it was blocked off from anybody in the US participating in it, which was another sort of interesting aspect. And what they've done now is they plan to launch a brand new blockchain, which Dan Latimer, who's the sort of resident genius behind the project, has basically designed a whole fresh, when we talked earlier about building second layers on top of Bitcoin versus launching brand new blockchains. They're going to be launching a brand new blockchain. So don't want to make this an advertisement for it, but I'm really interested to see what happens. They're supposed to launch in early June. And the whole concept there is that they have a foundation for building distributed applications on top of it. So if you had an Uber coin, I just like that use case for discussion purposes. If you wanted to build your own distributed app on top of the EOS network that could support another coin that builds a community around this particular application, that's their vision of it. So I think it's going to be a fascinating project to watch, and I wish them all the best. Any other comments on that, or even just sort of the distributed apps?
I noticed today Bitcoin Cash is up 12%, and Bitcoin's only up 1%, and they go back and forth. And I don't know. I wonder about that future, because that seems very strong, and people have told me that that's a lot faster with transactions. Maybe they're wrong, but just curious.
It's not faster. Bitcoin Cash is Bitcoin just forked. And what they've done is just increase the block size. So if you think of it as you have a certain size cup, and with blockchain, with Bitcoin's blockchain, it's limited to 1 megabyte. So when that cup fills up, it has to spill all the transactions into the next cup. They just made the cup bigger, and so it can handle more transactions at one time. And so therefore, it turns out to be less expensive. There's less contention. But the nice thing about forks that I like is when you have these happen, now the communities can go in the direction they want to go. So now all the people that want Bitcoin Cash to be successful, God bless them, have fun. People that still want Bitcoin get to stay on their path, and the development communities. I mean, that's really what it comes down to. Where are the developers going to put their time and effort? And so if they're putting it into Bitcoin blockchain or the Bitcoin Cash blockchain, the developers will ultimately decide, and then it comes down to a network effect.
Yeah. So I really like the last thing that Steve said, and I think it can also kind of be a response to EOS or to an ask on any of the other blockchains, which is that there is, it is true that developer talent is tied to the value of a blockchain or the reliability or security of a blockchain, and perhaps that can be extrapolated to apply to the price of the associated cryptocurrencies. So when you're looking at a project like EOS for me, or when I'm looking at something like Bcash or Stellar or one of the other protocols, what I'm really looking at is how large is the developer community, how talented is this community, have they achieved other success in the frontier tech space, and is this a distributed team? You want to see, Bitcoin has 100 developers, and that's growing actually. It's one of the most, it's one community where training is happening really quickly, and I like that. And you can research the developers and see that they've had success in securely at developing a stable network.
The problem is that once you have a successful protocol, you can easily copy and start Bitcoin too with exactly the same protocol. That's one of the differences between cryptocurrency and normal currency. You cannot have $1, $2, $3, $4, but you can have Bitcoin 2, 3, 4, however many.
That's true, but it's really important to understand that maintenance is not a small issue. And so I don't want to call out any particular developers, but we've certainly seen forks happen where the team meant to maintain a well-developed protocol was not able to maintain that. So everyone should take risk with their money the way they want to. So I don't have an agenda to put you off to any protocol, but the ask is to understand the development community that
platforms, that's my actually point of view, like quite strong point of view. All the platforms and protocols can exist without a native token. So Ethereum as a smart contract platform can exist without a token. Or if you consider Ethereum as a decentralized depository, it also can exist without a token in the future. And for the first type of for cryptocurrency, if you do a fork, your decentralization level can be completely different. So you could make a fork of Bitcoin, and from the outsider perspective, it will be the same code base, the same accounts, the same could be even mining power, but it will be run by one person. You can fake that, and there is no difference to like differentiate that. There is no possibility to differentiate that. It's like having a Chinese card, you can really if it's a copy, right? But if it's a decentralized system, you cannot. So there is no way to assess level of decentralization, at least for now. For the second type of projects, when you have protocols or platforms, if you make a copy, you increase basically amount of services that you provide. So if many companies will start giving their computing power away for money, and will have all the same APIs to do that, that will only benefit the society. So if there will be many forks of Ethereum, and they're all accessible, and they're all used by different organizations to run ledgers of assets, it will be only better. And forks of Bitcoin could make things worse unless they test certain new approaches.
Yeah, and I think it's sort of that spring effect of centralized versus decentralized. I mean, we see all of these forks of projects, a lot of them will just be abandoned projects at some point, and the ones that gain the network effect and continue to build momentum, they'll grow like weeds. I mean, that's the way I see it.
I'd like to give an example of, in BitMint we use a blockchain. We take the genius of blockchain, which was the idea of masking the identity of the two people that transact the money. You know that the transaction is in the ledger, but the identity is masked. We go a step further. We also mask the value of the transaction. So you have a blockchain where you know that X transacted with Y, coin Z, which you don't know if it's $1, $1,000, or $1 billion. So you just know the essence, but you have more anonymity, and therefore there's a
Swiss bankers invented that.
Well, we got the patent in 2008. So.
Question back there?
So basically, one of the things I wanted to see was what are the security vulnerabilities? Like the wallet and the exchange, there's a lot of hacking. A lot of them have been, a lot of coins have been lost. What do you think is a way to prevent that?
In terms of wallet management, I absolutely go to hardware wallets. That's sort of the way I do it. And I have a lot of things that have to happen before I can get to my coins. But it's really a matter of how you use it, how much you're storing, how long until you need to trade it. One of the biggest mistakes that we made at GoCoin in the early days is we had this elaborate system that we had to go through to get to our big store of coins. Well, then Mt. Gox happened, and we couldn't get our coins in trading position fast enough. Everything was diving, and literally we're losing tens of thousands of dollars by the hour, and couldn't get our coins unlocked. So it's really a matter of how you want to use it, when you need access to it. But that's a different topic. We can talk about that for hours. Catch me afterwards.
Anything with digital is
The gentleman back there was first, I believe. And then we'll get to it.
So I want to ask a question that revolves a little bit more around smart contracts and the usage of the underlying protocol. I think one of the things that's interesting, irrespective of your position on financial freedom, how you use the money, is the role of oracles and some form of informed data that can trigger these smart contracts. And just wondering where you're seeing really good innovation or maybe even incentives to have accurate oracles that can trigger, let's say, contracts or trigger transactions.
What do you mean by the where? Can you say, when you said where do you see it, do you mean in types of, what do you mean by where?
If you guys are, it's a landscape question. If there are particular protocols or companies that are coming up with innovative solutions for this, because it just feels like a critical dependency to actually.
Well, first of all, the idea is that the coin itself carries its history and its purpose. It carries much information as a trade on the coin itself. which increase the visibility, because right now you do all the bookkeeping by comparing income and expenses. The digital money allows you a third leg, a third place where the information is there. So there is less opportunity for abuse or double booking and fraud, just because there are three legs. And the thing that we are still wrestling with is how to translate a contract into code that will actually reflect it. Eventually, we will have it automated. You read a contract, and AI will translate it into code that is going with the coin itself, and the money cannot use except as allowed by the contract.
I think if I can answer it more directly, I think the places where oracles will start to surface in my mind, I think the use case of a sports book. I think the sports book in the next 10 years is completely dead because of smart contracts. And if you have, and I think the oracle will end up being somebody like ESPN or an authority that we already sort of trust to know that that's the outcome of the game. And there's going to be some sort of an incentive base so that you no longer need the casino now to be the intermediary. It's just a smart contract.
But we need to get them into the system. That's
I agree. I totally agree.
What's the work or the critical effort that's being requires basically them to get digitized and then them to be trusted?
And it is happening. There's a lot of behind the scenes work in development inside of big enterprises to figure out how they can build these sort of solutions.
And that's where the mix that we talked before between centralized and decentralized comes into play. We have a concept we call intermint, where we'll have mints that interact in a blockchain, but they themselves are centralized towards people that they know and trust.
Pavel, I think you had something?
Yeah, the smart contract thing is basically not that smart as people believe. So smart contract is just a piece of code. The only difference is that, so it's for digital world you have digital contracts, obviously for paperwork, paper contracts. And in digital world, the contracts will be written in a machine readable form, and they cannot fail in this case. What makes contracts smart is the fact that they reach consensus about their execution. So everybody executes this piece of code on their machine, then they reach consensus about the result. So a simple example would be if we want to order pizza, and then we vote whether it will be margarita or pepperoni right here, and then we vote for margarita and we order, and obviously we expect margarita to arrive, right? Because we reach consensus. That's smart. This is smart contract. So there are a few necessary conditions for smart contracts to be in real life. First of all, they can only manage already digitized assets. So if asset is not digitized, if there is no digital title for an asset, smart contract cannot do anything. The second is that these digitized ledgers, they have to be the primary source of information about the state of accounts. So if you have like an enterprise and they have their own ledger of stakeholders, and then they say, oh, we will run another ledger on Ethereum with ERC20 tokens, but the government will not recognize these ERC20 tokens as like, titles for shares, that won't work. It doesn't matter, mean anything. And the last thing is obviously consensus. If it's one organization and running smart contract, it's not a smart contract. It's just any developer can program this code that executes. Only if you have a consortium of companies or many players like auditors, regulators, and suppliers, then the contract becomes smart because they reach consensus.
Yeah. And it still has to also be the Oracle data, so data coming from the real world, non-digital world, still has to be fault tolerant, right? So if you're getting a bad source of data, you still have to be able to reach. What's most interesting to me are models where there's still some sort of Byzantine fault tolerance, where you're getting data from multiple sources and can identify a bad actor or somebody, or even an actor with erroneous data. And then to answer the question in a slightly different way than the other panelists, where I'm most interested right now today on smart contracting and data management for smart contracting is in civic deployment of IoT, where devices can at scale contribute information for smart contracts in a Byzantine fault tolerant way.
Yeah, that's a really interesting use case, the IoT. The one use case that people like to cite is about a truck that's transporting frozen goods, and at some point, along the path
looking at today is how do we, without the masses, we're no one, right? There's no adoption. Like without adoption of the entire masses, there's Bitcoin's one name, like that's it, just a cool thing, right? However, we've seen a lot of weight, and I believe that 2018 is when, 2017 Bitcoin went to the roof, and now even my brother-in-law is, someone that doesn't focus on technology or anything, asked me about it, and I told him in 2014 about it, right? What are the organizations, or what are your plans to keep bringing, education and understanding what blockchain and Bitcoin is? And for, since you're local, like in LA, like, what is it you guys are just focused on the big companies, like, venture capitalists, or how do, basically, what are you guys doing to tell everyone else, look, this is,
So this isn't LA specific, but it refers back to an earlier answer I gave, which is I think that as the community expands, it's really critical to anchor on core concepts of things like fungibility, decentralization, what it is to have hard promises from a tech and stuff like this, because frankly, the decentralized projects aren't the one with marketing budgets, right? And so the messaging going out to new users sometimes is quite inconsistent with the technology or the reasons why people came into the space in 2012, 13, and 14. And so I think it's about, then there are groups doing the hard work, and part of that hard work is onboarding developers that can be competent and additive to the system, right? So there's programs like in Bitcoin, what Jimmy Song is doing, or Chaincode Labs in New York, and this is why we see growth, or why we see quicker paced growth in the Bitcoin developer side. But for those of us in the room who are in the space because of concepts like decentralization or fungibility, which the reason why fungibility is important is because it just permits people from blacklisting your coins, right? So to continue to speak to our, brother-in-laws and, the people around us about these concepts and why you came into the space is important.
Another organization that's doing some really great work is the Blockchain Academy, and it's the Academy Token Project, and they have an accredited university and curriculum for developers that just want to learn, that are already developers that want to learn blockchain development. They have curriculum for people that are just fresh, don't know how to develop at all, and all the way through. And then they have an executive track for how should organizations and large corporations be thinking about blockchain. What are good use cases? What are bad use cases?
And also, buy books people like us write. Like the book Tether Money. By the way, they're buying it more in China than in the US.
We hope so.
So guys, we're all here for the evolution of blockchain, right? And one of the things that I think we're missing is every token, EOS, Bitcoin, Litecoin, mathematical cipher, right? And what we're not realizing is that these mathematical ciphers, as soon as quantum comes into effect, are going to be broken, right? So what are the solutions looking into the future that would not allow these ciphers to be cracked, per se, right? The platform's baseline, it's token baseline, or for that reason, any blockchain baseline.
Yeah, that's what we believe, that the use of randomness. There is a new technology that nobody talks about. It just became commercially available very recently, and that's the ability to generate random bits that are purely random, quantum mechanical random, not fake randomness like Trump would say, fake randomness, with the algorithms which we all use. All the cryptography is using this fake algorithms. Which can be cracked. But the quantum mechanical algorithm, the quantum mechanical grade, there are now companies that generate 5mm chip that I predict will be in every phone. And this injection of randomness will be the answer to quantum computing, to keep the technology above all the people who want to crack us.
Yeah, I want to congratulate our panel because we made it all the way through without bringing up regulation once. But we did, we got Trump, so. All right, so.
Randomness is very important question, and it's really hard. But there are many tools how to generate randomness already. They are used commercially for.
Yeah, but they're not. They are algorithmic.
No, they're not algorithmic. No, I built these things. Yeah, they're not.
So what are they based?
Thermal noise.
Oh, yeah, that's okay. As long as it's not algorithmic.
Yeah, it's not algorithmic.
Yeah, okay. No. It's not as good as quantum mechanical, but algorithmic is crackable. If it's not algorithmic,
Yeah.
you have security.
Blockchain info had this problem once when it lost money because it generated is predictable. Regarding any, like the history of cryptography was invention and then breaks, invention and breaks. So there will be always like information theory has an assumption of one-way functions. And if they exist, that one way means you calculate, it's easy to calculate one way and almost impossible another way. So if they exist, then if any, like there is a theory, then there always will be a mathematical way to protect information. So there are already standards of post-quantum cryptography. Obviously, they use much longer keys, so that you have to invent new chips, but that's already possible. There's no problem. Like when I was in my third course, third grade, 13 years ago, I wrote already a course, a small diploma about post-quantum cryptography. The books are already available, so that's not a new thing. And like Bitcoin, for example, is resistant to quantum computing. So if quantum computer is starting to break the digital signature, they cannot steal your Bitcoins right away. So there are some, Satoshi made this thing secure.
All right, so we're going to move on to closing remarks here. So I'm going to
direct ones, yeah.
I don't want to go to closing remarks. We'll just go kind of in order here. So if you fast forward, let's just say 10 years, in terms of the evolution of blockchain, give me an idea what your thoughts are on how many different protocols or chains we're going to see out there. Is it going to be tens? It's going to be hundreds? It's going to be thousands? And then sort of any closing remarks and shameless plug you want to put in. Gideon?
Well,
in the microphone.
yeah, like I say, with AI and Star Wars, the technology has a lot of evolution to do. We are running into use cases, but we have to focus still on maturing the technology. And that's what we are trying to focus on in BitMint. We believe in the power of true randomness to give us the security that we need for money, because without security, it will not grow. Just as a perspective, I would say, exactly 100 years ago, an American by the name of Vernon filed a patent, the Vernon cipher, which has later been proven to be mathematically unbreakable, the only one that's mathematically unbreakable. The reason that we don't use it is that it requires a lot of true randomness, which was not available 100 years ago. It's available now. A global way of changing value. So a lot of technology, and I believe in the role of randomness.
I think there's going to be a lot of cool new platforms coming up in the near future. Next 10 years for sure, there's going to be probably hundreds, maybe thousands of new technologies and innovations out there for blockchain and new blockchains and things available. In terms of digital currencies and its usage, I feel like it would be really cool to see it more widespread and used on an everyday basis. And I think that sort of starts to happen when the big banks get behind something like a token and maybe they launch their own or something like that, and sort of integrate it into an everyday lifestyle and everyone can use it, and that's sort of their integration into digital currencies. And I think that's when it'll start to be picked up, used more widespread for day-to-day interactions.
See, there are good news and bad news. Bad news obviously that many people lose their money because of the investing in junk securities. Yeah, shitcoins. Yeah, and even look at how Bitcoin is marketed. I mean, I'm pretty sure that everybody in Facebook saw a prediction from their friends, and then his friends came now and says look, I told you in 2011 to buy Bitcoins. That means that people market Bitcoin as get early and be rich, and it's zero-sum game. You cannot really play it all the time. So, but cryptocurrencies show the way how to increase security of all our systems, how to cooperate, because it's all about consensus. The whole blockchain thing is about consensus and cryptography. And at the end, it will be used obviously everywhere to manage all our wealth and vote and build supply chains, etc. But it will be based on something real, not just we issue tokens without giving any promises in equity and just send them.
Yeah, that's a great comment. I think I don't know how many blockchains will be in 10 years. I think that between now and then there'll be them will be things that, you know, probably aren't much used. So I'm not sure what my prediction is for how many we know about in 10 years, but my ask would be to make sure that when we're talking about what we're interested in, that we're anchoring on really the value system and the opportunity, and that it goes beyond, you know, the opportunity to get rich. Because I think certainly that wasn't the reason why Satoshi introduced Bitcoin, blockchain, or the technology generally. There's an opportunity now to make money, but he didn't introduce this to make people, or Satoshi, he, she, or the group didn't introduce this to make people in this room rich, right? It was supposed to be, I believe it's about financial sovereignty and access to financial tools and services for folks in this room and for folks outside this room, for people in emerging markets and those that haven't previously had access. And that's what I hope we'll be centering on, and what when we're evaluating innovation, we'll keep in the back of our mind.
Yeah, those are great points. And I want to sort of follow up on that point. I attended something called the Satoshi Roundtable a few months back, and this is it's the 4th annual. It's a lot of like early entrepreneurs and CEOs are invited to this event, and it's kind of an exclusive group of people that are the founders in the space.
It's not that exclusive if they're letting you attend.
That's I'm sorry. I was trying to set the stage of it's kind of the OG.
He's been going since the original Satoshi Roundtable, I think. Sorry, just a joke.
That's right. So, but the point is that we kind of sort of soft. Like we're looking around the room, and there's guys that have made immense wealth around. But the conversations weren't about how rich people had gotten, or who's driving what Lambo, or where they bought what. The conversations were all about innovation. The conversations were about altruism and how we can actually improve things. And that's really what I see about this. When we talk about the revolution, that's the revolution I'm interested in. And
there's a very good joke about self-motivation books, and it says that every self-motivation book about improving your life is about how wealthy person in California is telling how a poor person in Siberia how to leave the comfort zone.
I have a story to give you what you can tell to any banker if you try to convince them on Bitcoin. There was an historical fact. An American engineer came to Napoleon and told him, look, I have an innovative idea about boats. And Napoleon said, you came to the right guy. Nobody is more innovative than I am. What's your idea? And he told him about steamboats. So Napoleon is listening, and then he says, get out of my room. He says, why? I'm very innovative, but I'm not a lunatic. You're telling me to do what? To cut off the sails? That's how boats were going for thousands of years. You want me to cut it out and replace it with what? With lighting fire in a wooden boat? You're crazy. Out of here. And that's how history changed, and the Brits won, etc. So history could have changed if Napoleon had a little bit more understanding of a new technology. But that is the problems that we face. When I talk to bankers, I had one ask me, would you ever run out of bits? So I said, okay, next.
All right, with that, I think we need to wrap our time up. Thank you to the panel.